Welcome to our weekly Forex forecast, and this is for trading for the week of 12th to the 16th of October 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So to start the week off here, first of all, it's a holiday in both US and Canada on Monday, so expect slow trading day, especially in the New York session. And actually to all my friends in Canada, happy Thanksgiving. It's a Thanksgiving long weekend here for us. And then we also have Bank of England, Governor Bailey speaking here. So for the British pound here, expect volatility in the pound actually essentially going into December here, into the end of the year, because Brexit is going to happen at the end of December, and the longer there is no agreement, then there'll be volatility in the pound. So last week there were some comments that came out, or rumors that came out, saying that that UK was willing to walk away from the agreement or from the talks, and that caused problems with pound. And then later, basically, they said the rumors were false and there was no such thing. They were actually working on an agreement. So there was that back and forth that we have seen with the British pound because of some positive comments, some negative comments coming out, but do expect volatility going into the end of the year. Now, also, we are in mid-December here, and US elections are about two and a half weeks away here. So do expect volatility from that perspective as well. We did hear that President Trump had coronavirus and he was in the hospital, but he has been discharged, and now it hasn't been 14 days, but he has been holding rallies, or I should say he has been having I'm not sure if it's called a rally but he was talking to people outside the White House. So, and there are some planned rallies that are scheduled. Now, in terms of debates, there's been a back and forth in regard to holding debates in person because he has the virus, and that could, so that's a potential issue, and he's been pushing to have in-person debates. So we'll see what happens there. Essentially, the things that we have to keep in mind there, it's if President Trump doesn't win, we're going to see a drop in the stock market because President Trump's policies are good for businesses, especially large businesses that are on the stock market. So his policies are better for that, and that's why the stock market has done well. And if he is not elected, with Democrats being in power, the stock market is likely to drop. But if we see that he is really lagging in the polls leading into the elections, that may cause a concern. However, now people with the new stimulus package that they've been talking about, so there's been back and forth about that as well. They did say President Trump did pull out of the talks. However, he's back at the table, or they are basically talking again in regards to the stimulus package. So as we had expected, even though he had pulled out, which the stock market did not like so much, and now they are back, and we have seen the stock market go up as a result of expectations for more money being given to large businesses, but generally it's the large businesses that profit from it, which will be our businesses on the stock market. So overall, this is the kind of back and forth we have seen, and it has caused volatility in the stock market. It has caused volatility in the Forex market as a result of these things that are going on. Now, they won't go away still, so just be aware of that. Any sort of comments or news or rumors coming out in regards to Brexit talk or anything to do with the elections in the US are going to create volatility in the markets across the board. So just watch out for that. All right, and then coming up on Tuesday here, again, nothing major. Oh, we do have the employment numbers here from UK, even though they are not marked in red, these are important numbers. Just like the non-farm payrolls, these numbers do tend to move British pound. So especially if the average earnings go up, so that would be positive. If the unemployment rate drops, that would be good news as well. So keep an eye on these numbers. Positive numbers will lead to pound going higher. And then we have economic sentiment numbers for euro. Euro has done well. So if these numbers come in higher than expected, we're likely to see euro go up even more. With the US dollar here, we do have the CPI numbers. Now, inflation is not a big target for the Fed anymore. So these numbers may have a little bit of an impact, but overall, I think other things like elections and the stimulus package talks, that type of stuff will have a greater impact on the US dollar this week than we are likely to see from the data point. Other than that, on Wednesday here, we have PPI numbers here for the US, but any positive numbers that come out of the US will have a positive impact on the stock market. So it will just go to show that things are actually looking up, which is always good for the stock market. And then we have Reserve Bank of Australia, Governor Lau speaking. We have some Fed members speaking here. So at this point, Fed is essentially taking a backseat. They're not likely to do anything until after the elections. So I would not expect any sort of change in their stance in regards to the monetary policy at this point. After the elections, then we'll see if they are wanting to provide more stimulus. Excuse me, or how things go. But for now, I would not expect them to change much of their commentary. Employment numbers here from Australia, this will have an impact on Australian dollar here. Now, Australian dollar is also very much impacted. Australian and New Zealand dollar, both here, are very much impacted by what happens in the stock market. So if the stock market, or when the stock market goes up, Australian and New Zealand dollar tend to go up with it as well, and vice versa. So if we see any fluctuations in the stock market, take a look at the Australian and New Zealand dollar because they will move hand in hand with the stock market. So not just the employment numbers here, but the stock market movements, should we see volatility in there, will have an impact on Australian dollar here as well. Chinese data here also tends to have an impact on Australian dollar because Australia is very close to China, and China is a big export partner for Australia. That's why any positive numbers out of China will have a positive impact on Australian dollar as well. On Thursday, again, nothing here in regards to the red news, but we do have employment numbers here. Those will have an impact on the US dollar. Positive numbers are likely to push the stock market up, and that will be that will be a bigger, I would say, bigger impact than we'll see in the US dollar. A whole bunch of Fed members speaking this week again. So on Friday here, we do have CPI numbers here for the Eurozone. Positive numbers will have a positive impact on the Euro here. Euro has been overall positive partly because of other problems going on with the US dollar, but also because in itself, the ECB has essentially said they're not concerned about the Euro strength, and they're not going to do anything to stop the Euro strength, and that is positive. The economy has been recovering as well, and so all of the positive data will add to the strength in the Euro. To end the week here, we have retail sale numbers from US. These numbers will be important, and again, will have more of an impact on the stock market and secondary impact on the Forex market here, because any sort of good retail numbers here will show that the economy is recovering. And if the economy is recovering in a strong way and has strength, that is really positive for the stock market. And especially with the talk of the stimulus coming, it's likely to push the stock market even higher. So so that's it in regards to our data coming out here. So let's take a look at the charts here. We'll start off with euro dollar. So euro here, we saw price came into the support. It just turned around. So excuse me, the big turnaround here was because of the stimulus talks being reignited, and so the stock market sold off and US dollar strengthened because of the breakdown in the stimulus talks. Now, with the stimulus talks being back on the table, we saw stock market go back up, and as a result, US dollar dropped and all the dollar crosses have gone up, as has euro. So here this week as well, we had a bullish candle close. So last week was bullish, this week is also looking bullish. So now bias is bullish, and what I'm looking for is a bit of a pullback potentially into this 1.1760 level, and then a further move to the upside here. So this is looking quite bullish, and so far price has been trading in this range. It has rejected the bottom of the range, and now we're looking for a move towards the top of the range. So bias here is bullish for euro dollar, and in terms of the targets here, our first target will be 1.1900 and then 1.20. So bullish bias here for euro dollar. Pound dollar here, also bullish last week. Now the question here, with the pound, we do have to be mindful of British pound here because of the Brexit negotiations. Any sort of negative comments out of that will have a negative impact on the pound. Right now, though, it is looking bullish. It is coming into resistance, so watch out for that. But it is looking bullish, and I would be looking for a further move up. Again, keep an eye on the comments. Those do tend to move the market. But other than that, looking for a bullish move back into the highs here again. So this whole move here is likely to get filled. So first target here, 1.3200 and then 1.3350. So pound dollar also looking bullish here. Aussie dollar here, this one as well is bullish. And in regards to our targets here, we have so with this one, the type of move I would look out for again would be a bit of a pullback potentially, and then a further move to the upside here. First target 0.7320, and then second target 0.7420. So bullish bias here for Aussie dollar. New Zealand dollar, this one went up quite a bit as well. Now we have a bullish pin bar here, so this is looking bullish. It rejected the bottom of the range here, didn't even quite get into the bottom. It just turned around from just above the bottom here. So today or this week we have a bullish pin bar. So looking for a further move to the upside. Target is 0.6800. So excuse me. So this is bullish as well. Dollar CAD here, a big move to the downside for dollar CAD. Now with dollar CAD, we did see positive developments in oil, which makes a difference here. So now this is definitely looking bearish here. Next target, so in terms of the pullback, we could look at 1.3175 level and then looking for a drop from there. So this is looking bearish here. And target would be 1.30, and then we are into this big support level here, and we'll have to see. Price hasn't been able to break this level since 2018, so we'll see if it's able to get through that now. But for now, bias is bearish. Just watch out for the bottom here. I wouldn't try to short it beyond that at this point, but for now this looks bearish. Euro pound here, this one also looking bearish, big rejection from the top here. It did pull back, but we have a rejection. So looking for a drop here in the coming week. First target is 0.90 and then 0.8965. So bearish bias for euro pound. Euro Swiss franc, this one is also looking bearish. It's right into the support level here. It's been stuck here for quite some time. So if we zoom out a bit here, as we can see, it's been moving towards a support level here. So bearish bias, it's not very strong candle here. So I would be careful, but 1.0720 is the target here. So bias is bearish for Euro Swiss franc. Pound Swiss franc, this one has been trading in a bit of a range. So if you take a look at the daily here, it's still trading in this range, hasn't really broken out of it in the last couple of weeks. So keep that in mind, but it is looking bullish. We have seen this rejection, which means price may go higher. So target here is 1.1965. So bullish bias, and should it go there, should it go beyond that, we're looking at 1.2035. So this is bullish. I would be careful at the top here because it hasn't over the last couple of weeks broken this, so it could react here. So keep an eye on that. So bullish bias for pound Swiss franc. Dollar Swiss franc, this one has dropped a fair bit. So this is looking bearish at the moment. And in terms of the pullback here, we are looking at 0.9140 level, and then a further move to the downside here. Now, sometimes it may pull back into this pin, which is around 0.9160 level. So I would just keep an eye on that, but bearish bias here, target is 0.900. So bearish bias for dollar Swiss franc. Pound yen also looking quite bullish here, and very strong bullish candle close here. With all the Swiss franc crosses, dollar crosses, and yen crosses, we do need to keep an eye on the stock market, because as the stock market goes up, these basically US dollar will drop, so US dollar crosses will go up. Yen crosses go up and Swiss franc crosses go up when the stock market goes up. So with this one here, also looking for a bullish move to the upside here. And in terms, so pullback it potentially into 137, and targets here 139.50. First target 138.35 level, then 139.50, and potentially even higher. So bullish bias here for pound yen. Euro yen here, this one as well looking quite bullish for the week. Now we're looking for a move back towards the high here. And in terms of the targets, first target is 125.85 and then 126.85. So for our pullback, I will keep an eye on this 124.50 level, then looking for a further move to the upside. So this is bullish here for Euro yen as well. Dollar yen here, this one is more on the neutral side here. So we see that price has rejected this level. It did go into it. It rejected this level. US dollar has not been that strong. So, and yen hasn't been strong. This is why this is neutral. So in this case, I would look at a further move to the upside here. And if it doesn't go through, I would be looking for that move lower. But this may just be sideways this week. So I would just keep an eye on into this area here between 105 and 106.20-ish area. So neutral bias here as well. So question, gold and silver, Swiss franc and yen considered safe havens. Yes, gold and silver are reacting a little differently right now, but Swiss franc, Japanese yen are doing what they normally do with the stock market. When stock market moves up, Swiss franc and Japanese yen drop. Generally, gold and silver tend to move in the opposite direction as well. They're considered safe havens, but right now they're moving in line with the stock market. So there's a bit of a breakdown in terms of those correlations. But yes, they are generally, they're considered safe havens. So here, Aussie yen here also looking quite bullish, close right into, there's no wick at the top, so that's a very strong candle close. This is looking bullish as well. And in terms of the targets here, first target is relatively close into 76.85. So I'm just going to move that out of the way. Next target is 78.00 and then 78.50. So bullish bias here for Aussie yen as well. And we may get a bit of a pullback and then a further move to the upside. So as long as that stimulus talk is still on, that is bullish for all the yen crosses and Swiss franc crosses and the stock market. So same thing here as well for New Zealand yen. This has been trading in a range. As we can see, it came into the support, has bounced off. Last week, we were looking for a bullish move. We got that. Now, again, looking for a bullish move. So next target here is 71.20 and then 71.80, or sorry, 1 second. Okay, 71.20 and then if I can move the right one, 72. So bullish bias for New Zealand yen as well. So I'm looking for a move back towards the top of the range here. CAD yen here, CAD yen also looking bullish. And in terms of targets here, next target is 81.50. If we are going to get a pullback, I would look for this 80.10 area. And then from here, a further move up. So bullish bias for CAD yen as well. Possibility of US dollar recovery will be if the stock market drops, US dollar will go up. So we're going into elections, and elections will be, or going into the election time will be volatile. So yeah, it is possible. I don't know if it will happen, depending on how the stimulus talks go, but I would be more concerned about volatility around the US dollar than anything else. So gold here, sorry, silver here, looking bullish, very strong close. So this is what I was saying, everything is moving. So gold and silver right now are moving in the same direction as the stock market. So as we can see here, looking quite bullish here. And next target is 25.85. And beyond that, we're looking at 26.90. So bullish bias here for silver. Same thing for gold here as well. Big move here. So sorry, strong bullish candle close here, bullish pen bar. So looking for a further move to the upside here. 1975 will be the first target. And then we have 1992. So bullish bias for gold as well. Oil here, it's into the top of the range on the daily, and we have a small candle close here. So I would say neutral to this, even though on the weekly, this will look bullish, because if it doesn't get through the resistance here, then we could see a drop in oil. So oil is still range bound, so that is bullish. All right, so question here, can you help me understand why there's a negative correlation between US dollar and the stock market? Because what happens is money flows from cash into equities when equities are doing well. So nobody wants to hold the money in cash because you don't really get any much of an interest. Interest rates are at all-time low. So holding money in cash is actually negative because you're not getting any interest and you're paying bank fees. So, and with the inflation, the value of the money decreases. So maybe I can do a webinar on this topic or a video on this topic. So the money, it's not good to keep the money in cash. So people try to get the highest return possible, and stock market, when it is stable and it's moving up, there's a better return in the stock market. So investors will move the money from US dollars to stock market. So when stock market is going up, US dollar generally doesn't do that well, and the stock market does well. And that's because that's where people are getting return. And as people get more return, more people move into the market, which causes the market to go up even higher. So, so hence the bullishness in the US dollar, in the stock market. Okay, so copper here, this is the daily chart. Again, this is looking bullish. So from our weekly here as well, we are right into that resistance level here. So bullish bias 3.08 is the next target here for copper. And also when copper goes up, Australian dollar goes up as well, because copper is a big export for Australia. Bitcoin here as well, going up right into the resistance though, so just be careful with this one, but right into resistance, it is looking bullish. Again, this does not include the weekend numbers because the chart, my broker has not updated the chart. They're closed on the weekend, so this is but based on the weekly here, this is looking bullish. I would just watch out for this 11,000 level. Okay, stock market, as we discussed, looking quite bullish here. Next target for S&P 500 is 3,500. And then we're looking at 3,585 all the way into the highs. So bullish bias here for S&P 500. Nasdaq here, same thing, very strong bullish, close right into the highs here, which is a very strong close for the week. So in this case as well, we may get a pullback into 11,600 level, but this is again looking very bullish. 12,000 is the first target. And then after that, we'd be looking at the highs of 12,450. But bullish so first target will be 12,000 here. So bullish bias here for Nasdaq as well. Stimulus talks are very bullish for the stock market. All right, so next thing here, we have Dow Jones also looking quite bullish here. 28,800 is the first target. And then we have 29,200 almost. So bullish bias here for Dow Jones as well. So this is, again, very solid close for the week. And then looking at DAX here, this is also looking bullish. Next target here is 13,320. We may get a pullback into 12,920 and then a further move to the upside, something like this. So bias here is bullish for DAX. And for FTSE here as well, this is looking bullish. Next target here is 6,130 and then 6,180. So bullish bias here as well. Next one here, we are looking at Nikkei. Nikkei did try to go through the resistance here. So this was trading in a range for quite some time. It has gone out of the range, but it's come into the range again. So we just need to be careful with this one. It's not holding above the range. So right now it is bullish. And next target here would be 23,780. And then potentially we could see a drop. We'll have to see. So this, it's basically filled this move that we saw from COVID. We saw this drop. That drop has now been reversed. So overall, this is bullish. I would just be mindful. It hasn't been able to break through the resistance. So there could be some concerns. We'll take a look at those on the daily. So looking bullish for at the moment now. All right, so we will wrap it up. You guys have a wonderful rest of the weekend and a great trading week. So question here, is it true that during US elections, stock market mostly underperformed due to uncertainty? Yes, the stock market tends to get volatile going into the elections, and at the time of the elections, as we see the votes being counted and all of that, there can be big fluctuations. Last time there was a big fluctuation because Hillary was basically the candidate that was supposed to, or people expected to win. And when President Trump won, there was a drop and then markets started going back up. So there was quite a bit of fluctuation right on the election day. And this one, right now, we have a lot of uncertainty in the market, but the stock market is holding up right now because of the stimulus talk. So more money being given to businesses is good for the stock market because it's the large businesses that are on the stock market. But yes, the stock market will will become volatile, and we may see a drop. If we didn't have the stimulus right now, talks right now, we would be looking at a drop in the stock market. So the stimulus is, so on one hand, stimulus is positive for the stock market, and the elections are negative for the stock market because people don't know who will win. And right now it is a bit of a close race. And then there will be health concerns for President Trump as well, because he is sick. And should his health deteriorate, that will throw a wrench in things as well. So I would just be careful trading over the next couple of weeks. And then after the elections, if President Trump loses, then we are going to see more of this lawsuits being filed, or he will say that election wasn't, the results aren't correct, and there will be some lawsuits and things like that. That will add a bit of uncertainty in the market as well. If President Trump wins, stock market will go up. So that's my analysis, and perhaps I should do another another little thing on it, but that's in a nutshell. That's what we're looking at. All right, you guys, happy Thanksgiving again to my Canadian friends. For everyone else, you guys have a wonderful trading week, and I'll be back with a daily analysis on Monday. Bye for now.